Royce, 5 minutes.
Thank you, Mr. Chairman. I thank our witnesses for joining us here. The Credit Repair Organization Act, CROA, is a strict liability consumer protection statute that Congress passed to defend consumers against false claims of fixing credit reports. Unfortunately, access to credit monitoring services provided by credit bureaus and others has been threatened by the courts moving away from Congress's original intent with CROA. So my first question to Mr. Pincus, what's the impact of eliminating class action lawsuit waivers for those under CROA's jurisdiction that offer credit score monitoring?
Well, unfortunately, it will open the door to these very large, very draconian class actions that can really threaten hundreds of millions, maybe more, in liability. And in the real world, again, we don't know whether it's meritorious or not, but the company can't take the chance. So it's either going to have to pay a lot of money in settlement, which is going to change its whole business structure, or it's going to conclude it can't be in that business anymore because the risk is just too great.
Or without a fix to the CFPB's rule, or a fix to CROA, which I proposed with House Resolution 347, the Facilitating Access to Credit Act. My conclusion would be that credit monitoring products and services would be severely limited, but certainly one of those consequences. Community financial institutions, if we go to another important subject here, such as credit unions and community banks, have to maintain strong personal relationships with their customers. At a time of unprecedented regulatory burdens, their success depends upon this. So my second question to Mr. Hong, how does the arbitration process benefit consumers and contribute to better relationships between consumers and their community financial institutions, and what will happen when the CFPB opens up credit unions and community banks to class action lawsuits?
If I can speak on behalf of those smaller institutions, one of the things that you'll see one of the benefits that arbitration can provide them is the fact that, they've developed these dispute resolution processes that are more informal and convenient for consumers in nature. And so if you take away their ability to offer those types of proceedings, and then you potentially open them up for dramatic increases in class action litigation risk. And so in those instances, they will probably have to have a conversation with at least their prudential regulators about how they should take compensatory actions on their side to reserve more capital to deal with that type of risk. And I'm sure it just makes prudent business sense to hold on to more capital for defensive litigation purposes.
Well, I'd like to ask unanimous consent to submit a letter to the record from the Credit Union National Association that highlights the problems the CFPB's arbitration rule will create for community financial institutions.
Without objection, so ordered.